Hello everyone, David here. Welcome back to the channel. As you know, besides long-term investing, I also do short-term trading, mainly holding orders within the day, also known as day trading. However, many people mistakenly think that day trading means you have to monitor the chart, watching the price move all day, leading to many risks during the entry process. In fact, I have optimized day trading without spending too much time to avoid affecting other tasks. Day trading is not something easy either. It is like a skill that needs to be practiced and mastered. Our problem is how to shorten that time, mastering it as soon as possible. So besides a clear plan and roadmap, we also need to have an effective method, but simple enough to easily follow and apply. In this video, we will dive deep into that. As usual, if you have any questions, please watch the video again multiple times and comment below the video so I can compile the topics that people often encounter. We will start right now. To understand day trading, first I will briefly review the terms related to time frames from high to low. First is investing. The holding time for an order when investing is usually quite long, calculated in months or years. Second is swing trading. Orders are usually held for a few days or a few weeks, usually on the 4-hour time frame or above. Sometimes you can still look for entries on the 1-hour frame. Day trading, orders are usually held and closed within the day, usually on time frames under 1 hour. And finally, scalping. The order holding time is short, from a few minutes to a few dozen minutes, usually entering orders on the 5-minute frame or below. Based on the above factors, we can see the advantage of day trading is holding and closing orders within the day. When going to sleep, we no longer have to worry about how our orders are doing. Tomorrow, we start finding new entry points again. The disadvantage of day trading is that traders easily make many mistakes, like entering too many orders, looking at the chart too much, thereby breaking discipline, entering orders recklessly, and ending up under pressure or stress. It's not like swing trading or long-term investing. Holding orders longer makes you less eager to enter new ones. Now, we will start going through a practical case. This is the chart of the XAUUSD currency pair on the 5-minute frame on Monday, May 5th, 2025. Because it is Monday, we can see a small weekend gap here. Normally on Monday mornings, I will just glance at the market situation to see how it played out last week. To grasp the overall general trend, because of day trading, I will usually look at the 5-minute frame, and if necessary to look at a larger frame, I will look at the 5-minute frame. On the 5-minute frame, I can zoom out the chart to see the overall picture. In a larger picture, we can see a slight downtrend phase here, followed by strong upward momentum in this area. And up to the current moment, we can see that after this strong upward momentum, it starts moving sideways, then creates downward structures, breaking through an important base of the buyers. Then it continues to move sideways and is showing a further downward tendency. Thus, from this overall picture, we can see that previously the price was in an uptrend on this 5-minute frame, then moves sideways, and up to this most recent stage, it's a downward momentum, moving sideways, and seems to continue a downward wave, breaking through this bottom area. So we can see the current direction, the price is leaning towards a decrease on this 5-minute frame. Looking at it this way, we might just need to focus on the nearest picture from the price increase stage to the recent price decrease. We do not necessarily have to focus too much on the previous further stages. Or even many people might go to the 5-minute frame like here, and zoom the picture out even further, then start analyzing the price too much in the previous stage. Why shouldn't we do that? Analyzing the long picture ahead might still have a little effect on the current stage. However, in this current stage, our main trading time frame is the 5-minute frame, But here is the 5-minute frame, meaning in the small time frame, it is following the momentum of the current water current. Here, it is leaning towards a decrease. Whereas before that, on this 5-minute time frame wave, it was leaning towards an upward direction. Thus, when we go back to the 5-minute frame, we will enlarge the picture to see the candles clearly. So like this stage, if it leans towards decreasing, we enter a sell order here, stop loss above this area, and the price only needs to go down to this area for us to achieve 2R. That means the distance of the picture that the price moves so we can achieve a reasonable R number is not so large that it forces us to analyze those far previous long-term pictures. Even on a larger time frame, the 5-minute frame, we can see that analyzing the previous stage here is almost unnecessary compared to this order. That is a mistake we need to avoid. Returning to this stage, we are seeing a picture that is leaning towards a decrease. And as I said earlier, in the morning, I only need to briefly focus on which products have a clear force leaning more towards which side. Then I will mark them to focus on observing those products more closely. Like here, I clearly see that the force is leaning towards decreasing after a previous increasing process. So I will mark this product, so that later or in the afternoon, starting the European session, I will wait and monitor it further. As for products where the trend is not clear, I can skip them. No need to waste time on them. Leave them for the next day to look back. Like at this moment, it is around 8:30 a.m. In the next video, we'll continue breaking down the market in real time and look deeper into how price reacts after these struggle phases between bulls and bears. I'll also continue sharing additional market observations and trading ideas inside the trading room, so feel free to stay connected and follow the journey together.